Hey everybody, welcome back. Alex, according to the mortgage reports that came out September 19th, 2024, the home equity gains has reached $1.3 trillion. So it's $1.3 trillion in home equity in US home today. That's giving the average borrower about $315,000 per home in home equity. When you hear things like $1.3 trillion in home equity, what is your first thoughts when you hear that number of people have that much equity in their home?
I think my first thoughts are questioning if that's if that can truly be accounted for.
Yeah,
Mhm.
let's assume that it is. Let's assume that it is true. $1.3 trillion in home equity. What is your thoughts behind it? When you see a report like that?
Yeah, I think I would need a little bit more detail. I mean, like as to the question, I think $1.3 trillion dollars. It's a lot of equity. But I think if you look at reports probably from back in 2007, we would probably see something similar. And so I question if this will sustain at this level.
For me, I look at it as a number that don't matter. I look at it as a number that don't matter. So 1.3 trillion. Let's just say it's 1.3 trillion. And this is something that economists use and, talking heads on CNBC use. And they say these people have all this untapped equity. But this is the mistake. And then, homeowners believe it. They say, oh, I got all this equity. But this is one thing, and I talked to a lot of homeowners that they didn't know. They thought just because they had the equity, that means it's their money. It's not. And I'm not going to even go to the real estate, I mean the investor side. I'm just talking about just strictly homeowners, people that live in homes. They think the money belongs to them. They think that just because they think that their houses are valued based on, or they can pull out that money at any instant, which is 100% absolutely not true. Your home can have $315,000 in equity, but you cannot tap into that equity unless you have this thing called a job. On top of having a job, you also need to have your debt to income ratio be lower for enough if you tap into that equity that your job will still be able to afford the new mortgage that goes along with it. So it's not because let's just say somebody got a house paid off but no job and they got $250,000 in equity. The only way with no job you're seeing the equity if you sell your home. You're not going to see that money going to the bank with no job and say, "Hey, my house got $215,000 in equity. Give me $75,000." The same paperwork, especially if you refi, the same paperwork that you paid to buy the home and the same requirements it took for you to buy the home is the same requirements that you need to refi, to take out a second mortgage, to do. It's the same thing. It's the same process. So it gives this illusion that people have they can still stay in their home and they got $315,000 sitting in a bank account that they can just easily tap into. But we also know that we're at record credit card debt. We at record delinquency on car payments. We're we're at record uh interest rates. Well, the short term record interest rates on home loans. So if you're tapped out and you're living paycheck to paycheck and you got $350,000 in equity and you refining your home and you don't your debt to equity ratio will go out of whack because especially most people who got a home now they're like 4% interest rate and then they got to refi it to a 7 and then they take another $100,000 out on top of what they have. Your job, you get the loan because of your job, not because of the equity that you have in your home. And I think that's the big misnomer that's out there. And I literally talked to like four homeowners yesterday, and they thought like, oh yeah, I could just take the money out. I was like, do you have a job to pay the higher payment? One guy said, oh, I don't even have a job, but my house is paid off. They're not getting you the loan. One person said, oh no, I'm tapped out, but and they said they got like a 3% interest rate, a 3% interest rate. I was like, so you're gonna go up to a seven, and a lot of the debt that you have, how you gonna pull it off? Your numbers still have to work. I mean, one guy told me, he said, oh, if you got, long as you got an 850 credit score, the real number is 720, but as long as you got an 850 credit score, you could just walk in and get whatever you want. That's not true either. The banks need to see that you can cover the cost of whatever you borrow. And for most people in America, that's a job. So if you've been sitting in the same job, not getting promotions and not doing anything, and then now you're tapped out, you're going to continue to be tapped out unless you sell the house. That's your way out, selling the house. Not, oh, I can refi, take some money out, then life is good. But I think people don't understand that part of it. And I think that's something that the news media and the GDP media and the financial media, they always want to throw out there to say it, but it's another shoe to fall. You need capital, or you need a job that's going to be able to cover the extra debt that you're trying to take on. Banks ain't blind just to say, oh, well, yeah, we can give him this money. How are we going to pay it back? I don't know, but hey, he got the equity in his home, so we can give it to him. That's not how it works. So what's your thoughts?
Okay, so now I see where you're going with it. Yeah, I mean, to my point where I had said that I question if that equity can be sustained, is because I mean, we saw like probably even more equity back in 2022, and we've seen prices drop. And I mean, I'm mostly speaking just for Florida, but we've seen prices come down pretty heavily from just 2022. Not to prices that we want, but houses that were selling for like $500,000 might be selling for 375 now. So that's why I also question like, can they actually depend on this equity even if they could tap into it? Because, you know, depending on how the economy is going to go in the future, what is that going to do to their equity? Is it going to keep, increasing, or is this actually going to just reverse it back to, normal levels? But um I mean, all the points you mentioned were accurate. I just didn't know where you were going with it. I mean, yeah, I think that's something that a lot of people forget, that you have to have, an income. I mean, the bank, it's not a car, you can't just basically lie on it. And then, I mean, like when you buy a car, you could just say like, you make this amount or whatever. But when you're buying a home or refinancing a home, the banks are actually going through underwriting and looking at all the details. So it's a lot more difficult, strenuous than, buying an automobile or something. So the process to actually get approved for that equity is a lot stricter uh, than some may think.
Yeah, no, it's a crazy thing. It's the knowledge or the lack of knowledge that the people that listen, I'm not gonna say that listen to the news, but the lack of knowledge that people have about how this machine works, how it operates. It's amazing to me, especially if you own a home and you don't know how all the products work, and what you have to go through, and what is the requirement of what's needed. And I understand, people buy a home maybe once, 1 to 3 times in their lifetime, and so it's not something that they very keen on. But when you're in those situations where you need to tap the equity, and you listening to the news, and you thinking that, oh, I can just tap the equity, I don't have a job, I can refi, it's going to be easy. No, it's not. uh to your point of, will the equity sustain, that's a whole nother topic. But the reason why, and a lot of the reasons why, the Great Recession, financial crisis happened, and a lot of people walked away, is because they was told they was underwater on their homes, meaning that they owe more than the house is worth. Some people they was in short-term bridge debt. They was in, IO loans were just interest only loans and it was variable and they just changed with the times. So they was in that, and that's a lot of reasons why they walked away. You know, will is the equity sustainable? I mean, right now, I think in the next 5 years, I mean, we might have a plus or minus, maybe 10%, but I'm not seeing anybody who bought a house before, 2019 be underwater. I don't see it. I mean, I could see some people that I'm talking about in Florida who paid during the inflated times, 2021, 2022. Could they be underwater? Absolutely. Absolutely. But for the most part, the people that was already there who already been setting in 2019, they'll be fine. But yeah, this home equity thing is something that people
I
throw
mean,
around a lot,
so I
and
got
I
one
don't think
too.
they understand. Yeah.
I mean, with the equity portion, when I think one thing people forget to account for is they get so distracted by the estimated value on their home and they look at the equity amount. But you and I both know the majority of individuals that go through a sale process to sell their home are going to use a realtor, are going to get lowballed, or, like the equity they're hoping to get is probably going to get cut 15 to 25%. And then that's what they're going to get at the end because they don't know how to actually extract all the equity out of the property correctly. So I think that's another thing is like they believe this false number. And aside from just refinancing, I mean, and then on the refinancing point, people don't realize you can't just take out 100% of the value of the home into a loan. Like you don't, you get it's 70% loan to value. So it's not like you're just gonna dump, you're gonna extract every dime out of it. So I think people forget to account for that too.
Yeah,
There's a lot of,
and to that point of 75%, some lending institutions already went to 60% loan to value.
mm, yeah. So there you go. I mean, so it's a lot of things that people forget to account for, or maybe not forget to account for, but they just aren't informed and they have the wrong information. So, with that being said, guys, if you have any questions or comments, let us know down below. Don't forget to like this video, share, subscribe. We'll see you guys on the next one.